Hello, and thank you for joining this CPA.com webcast. Before we begin, we'd like to show you how to make the most of this interactive session. First, take special notice of the toolbar located at the bottom of your screen. These tools will help you access materials, download the slides, print CPE certificates, and communicate during the live event. Note that live links in the slides can only be accessed if you download the file locally. To earn CPE credit for this event, you are required to be logged in for at least 50 minutes and click on 3 out of the 4 poll questions. Ensure your ability to receive these poll questions by disabling all pop-up blockers on your device. You may view your CPE progress by clicking this button on the platform toolbar. Once you've completed the poll questions, you can access your CPE certificate here as well as in the follow-up email. To optimize your viewing experience on a mobile device, make sure you're connected via Wi-Fi instead of your cellular network. Disable any pop-up blockers. Do not enlarge windows as they can cover the CPE checks. And when viewing in landscape mode, click the camera icon 3 times to view the program in full screen. At the conclusion of this webcast, there is a short feedback survey. Let us know how we're doing and how we can improve future webcasts. Now, let's get started.
Hello, everyone. Thank you for joining us this afternoon. We are here today to talk about outsmarting Nexus and compliance headaches with your tech-forward approach. My name is Amy Merletti. I will be your host and take you through this conversation today. First, I would like to go through what we will cover. So coming up this hour, we'll start by setting the stage and talk about some of the complexity in the SALT space, and then go really high level, talking about the full compliance life cycle from Nexus to e-invoicing. Talk about outsourcing versus in-house compliance when it's time to recognize that tipping point in scaling, leveraging technology and how even using the right tech partner can really move the needle for your firm or your company. Then we'll end up with the Q&A and really get to ask some questions to our lovely guests today. So like I said, my name is Amy Merletti. I'm a Senior Marketing Manager here at CP.com, and I would love to introduce my 2 guests today from Tronconi Segura and Associates. Tom, I'll go ahead and start with you if you'd like to introduce yourself and move on to Jared.
Good afternoon, Amy. Thank you, and thanks for having us today on this webinar. My name is Tom Mazarek. I'm a partner with Tronconi Segura and Associates in Williamsville, New York. I've been practicing state and local tax for over 25 years. Started out in the Big Four and transitioned to Tronconi Segura, a local mid-sized firm in the early 2000s, and have been a partner since 2018. Practice solely in state and local with a specialty in sales and use tax.
Thanks, Amy. My name is Jared Levy. I'm a senior manager with Tronconi Segura and Associates. Been practicing sales tax for about 24 years now. I've spent some time in industry and working for the government. I'm a former New York State auditor, and I've worked for the telecom industry, and for the grocery sector as well.
I love it. So we're bringing both sides of the house of expertise in here. You've been on one side, now you're on the other. So I think we have a good full picture conversation. Tom, I'd love to go ahead and set the stage with our attendees here and just give a little bit of background about your firm.
Sure, thanks. Tronconi Segura and Associates is a full-size CPA firm in Buffalo, New York. We're actually kind of north of the city in Williamsville, and we have a second office in Lockport, New York. We have a full-service tax practice, accounting and auditing, small business. And then we also have these specialties like state and local tax. We have a great cross-border practice given our proximity to Canada. We deal with a lot of inbound Canadian businesses doing, selling down in the States. We also have a strong M&A practice as well. About 150 people in 2 offices, like I said, and our SALT team is about 8 to 10 people at any given time, depending on whether we're doing compliance or, in depth with a lot of projects. So.
Wonderful. Thanks, Tom. And for those of you who aren't familiar with CPA.com, I just wanted to give a little bit of background of why we're here and what we do. So we are here to support the accounting and finance profession, and we're really talking about transformation via education and via technology. So we want to lead the ecosystem and provide all of the best resources, whether you're an accounting firm or whether you're in-house, to help support you to grow your practice and grow your technology ecosystem. So I'd love to dive right on in to our first poll question. And this is going to help guide our conversation today to understand where your challenges are. And also, too, if you're here for CPE, this is your chance. So this is your first of 4 poll questions, and I'll direct your attention to where the slide view is on your screen. If you're having trouble, feel free to refresh your screen and undo your pop-up blocker. So our first question today is, what is your biggest challenge in managing SALT compliance? Is it keeping up with changing Nexus rules, managing exemption certificates, handling multi-state filings and remittance, or finding the right technology to streamline compliance? And I'd like to, Jared, get your opinion here. Where do you think we're going to land with this one?
I think we're going to probably with A or C. Focused on A, I think.
I think so too. Those seem to be a little stressful.
Seems to be the hot topic at the moment.
All right, so we've got about 86% submitted. I'll give everyone just a few more seconds. If you're looking to get CPE for this discussion, let us know what your biggest challenge is in managing SALT compliance. All right, we'll close this out in 3, 2, 1. You hit the nail on the head, Jared. So I think we have a great discussion ahead of us.
Mm-hmm. Yeah, that's great. That seems to be the forefront concern for most folks.
Yeah, so we'll stick on that complexity topic.
Okay. So let's talk a little bit about So let's talk a little bit about like complexity of SALT, right? For some firms or businesses that may not have the staffing to address those challenges. Of late, the focus is really on economic nexus. It's an interesting time for tax professionals, maybe not so much for businesses who are trying to expand into new states or territories. With the onset of economic nexus laws, it makes it more challenging to stay compliant for state and local taxes. And as you can imagine, it's a new area. So it's probably 5 or 6 years old. And states continue to make changes. When it first came out, it's been dubbed kind of as the Wayfair rule. States looked and said, hey, if you got 100,000 in sales, 200 transactions, you got to register in my state and forget about physical nexus. Well, that's something you want to think about is a lot of companies have said, okay, well, I don't have economic nexus. I don't think I have a nexus at all. Is physical nexus didn't go away. That's, continues to be a pain point that businesses have to pay attention to. And it's certainly something we try to tailor solutions to our clients, based on their individual needs, and, kind of what their roadmap is. And then the last thing for, like economic nexus and like marketplace facilitator is be careful when you sign up to sell on, Amazon or Instacart or some of these other platforms. You really want to take a step back and say, figure out, am I responsible for emitting the taxes, or is it the marketplace who's, really, facilitating those pathways to the customers? So, and then the last thing quick is this seems to be a trending item is, a lot of clients are selling on Amazon. And because they think they don't have economic nexus, they're forgetting that they might have physical nexus with Amazon carrying inventory for them in various jurisdictions. Yeah. Again, just another way that a state could try to tag you for nexus. And it's, it's certainly something to, to keep in mind as you continue to grow your business.
What, Jared, too, and that's a bigger than sales tax issue. Having that inventory in different Amazon fulfillment centers across the country, having that presence in the state could also give you Nexus for income tax. So the business may have an income tax filing requirement in addition to sales and use tax that really, you need to keep on top of that, going forward to make sure you're complying with the income tax rules too.
Yeah, and if you focus on one tax, certainly overlooking the other could lead to states looking at your profile. Lately we've seen states like Wisconsin, California. Your company might have registered for income tax, forgot sales tax, and soon enough, the state will catch on and send you a Nexus questionnaire. So
the states are smart, right? I mean, they're cross-referencing their databases. They see you registered for one and not the other. Eventually they're going to start asking questions, and those questionnaires are coming in the mail before you know it.
And I think something, you keep that in mind is this is really why, we're here today is we're going to talk about automation and how that can, ease the compliance burden for your business the states are getting closer and closer to data and access to more information, having the ability to do, real-time collecting, turning states on, as fast as a flip of a switch, it's more and more important for you to keep an eye on that and see if that's something that's a right fit for your business. And especially, our friends across the pond, are considering e-invoicing. It's something we haven't seen much here in the US, but it's certainly something that it's become a hot topic. Probably the closest thing here in the US is like real-time, like daily reporting has been brought up like by Massachusetts and some other states, but it's kind of, slowed down for now, but certainly something we could see in the future, Tom?
No, for sure. I mean, it's amazing. Over the course of, my career, I started a few years after Quill, right? The physical presence law back in 92. But the economic nexus and, expansion of Nexus has always been a thing, right? Since the early to late 90s, and then as Amazon and e-commerce exploded, the states wanted more and more, and economic nexus became a thing. It's the same way with the taxing the digital goods and services, right? I mean, that's been a growing concern, and you see about half the states doing that now. But the tax laws were written back in a time where that wasn't a thing. It was tangible personal property or services. So they're taking laws that were written decades ago, trying to apply them to high-tech technology, digital goods and services, information, SaaS. And it's very complex. And we're seeing more and more states like Louisiana, effective January 1st this year, and that they had a big tax reform package, but part of that was enacting new legislation taxing SaaS, software as a service, and digital goods and information services. Vermont did that last year, and I think that's going to be a trend we're going to continue seeing, in the coming years as more and more states look to expand their tax base, so to speak, and find ways to collect additional revenue.
I think that's a perfect segue into, taking a step back and looking at the full life cycle of compliance. Jerry, you brought up a good point of if states are cross-referencing their databases and seeing, filings in one and not the other, that triggers your letters. So talk us through, Tom, start us here, talking us through where the nexus happens and then following around our circle and what's really important not to miss.
Sure. Thanks, Amy. This is a kind of a diagram we like to share with our clients when we're kind of starting out on a project like this to really let them know, okay, it's multi-step. We have to determine, number one, whether you have nexus, whether it's economic nexus or physical presence, and then that leads to registration. But as we'll see on the next slide and talk further, there's a lot that goes on between, that first point of saying, hey, we have nexus, and then registering. There's a number of things that we need to do and the client needs to do to really understand what their exposure and the implications of that are. But, typically speaking, once a business has nexus, we'll determine that, you need to register. Maybe it's an opportunity to do a voluntary disclosure with the state, go back and, pay back those years of taxes, within the statute of limitations. Kind of gets you a clean slate with the state moving forward. Some businesses, don't opt to do that. They may just roll the dice and register and see what happens. But, once we register, collection of that tax, that tax has to, whatever system your business is using, financially, it has to bridge to a tax engine that has up-to-date sales tax rates and provide the ability to collect tax from your customers. So once we have that tax, it's great. You got to now report it to the state. So, you may, if you're starting out, you may have just been filing returns in, one state. We have a lot of clients here in Buffalo area. They were just filing a New York State tax return, started really selling aggressively online, hitting the thresholds. Now they're filing in 30 to 35 states plus some localities. That's a big lift for, a small business at times with maybe just one or two people in their accounting department. That data is not clean sometimes. You got to kind of clean that data up and be able to get it into a system, like Vertex, which we use in-house, to report and file and pay those returns. And then evidently after that, you're always going to get notices, right? Whether you missed the deadline or, there's a collection discount issue, you get notices about filing frequency changes. So it's very, very important to, watch those notices and, see what's going on. A lot of them are, I would be considered junk mail. It's a rate change or just some announcement that for some reason states still decide to mail to registered taxpayers. But you got to keep up with the notices, and then, not eventually, don't want to say eventually, but, sometimes you do get audited. These days, there's a lot of states doing more remote, or what we would call a desk audit, where you're working with somebody over the phone who, typically just wants to see your sales and what you're doing compared to the returns that you filed. So, that cycle goes round and round, for multiple states, depending on where you have business activities.
Yeah, that's a great point. And Jared, when we were prepping for this, you were talking about some of those environmental changes that can impact these different areas of the life cycle. Can you talk about that? I think you mentioned delivery fees.
Yeah, that's a good point, Amy, and thank you. And even personnel changes too, that just came to mind as Tom was talking through, the circle of compliances. We see oftentimes as the governments are continually seeking new ways to find revenue. And one of late is delivery fees. And obviously with the internet, the e-commerce channel has exploded, and the states are saying, okay, well, if I have a larger tax base and I apply in their mind, a insignificant fee, they can generate a ton of revenue. Well, what ends up happening is if the folks who are running their business aren't tax experts, right, or they don't have enough staff, they're not staying on top of these changes. And 2, 3, 4 years go by, depending on statute in a particular state, you can accumulate quite a liability. And if you don't collect it like you should from the customer, you end up being on the hook for it. So that's why this is like it's a constant monitoring of sorts, where you've got to, stay on top of these changes. And you got to have, tools like, we at the firm use, a research tool to stay on top of, the tax law changes. We get, like a news service through that program that notifies us of the changes, just like the one Tom mentioned before with the most recent LA change. So we see a lot of that. And then, personnel changes, right? It's hard to keep, good qualified staff that's familiar with these rules, because it's a bit of a specialty. SALT is just like income tax and other areas of finance is, being able to keep folks in the same seats and constantly doing the same thing so they build up the muscle memory is a challenge, right? And especially, in this day and age, as the rules aren't getting simpler, they're just becoming more complex. So.
Yeah, Jerry, I'd like to stay with you and have you talk us through some of these plans for sales and use tax compliance.
Yeah, what I'm hoping to do is we can kind of talk about, like what we do with our clients, and how we, if a client approaches us and says, I've expanded my business into a number of states, or I'm selling this new product that I didn't have before. Hey, can you take a look and let me know if it's something might be taxable, might not be. Do I need to file in a state because of that? So I'll kind of walk you through that journey here in a second. And that's really what we're trying to accomplish here on this slide is you kind of think of it like an audit, whereas we're on the good side, or, you might hear people talk about the auditors being on the dark side. But our goal is when we meet with clients and try to figure out a solution for them is, one, right from the beginning, we want to understand their business. Sometimes, especially with technology, we have the ability to, look at the marketing view of a particular business on, where they are, where they're located, what they're selling, to kind of figure out what their business activities are. And then we might have an opening conference with that client to have them tell us more, right, about what they're doing, what they plan on doing in the future. And then we can kind of build a roadmap that fits their current Nexus needs and what it will look like in the future. And then depending on how long they've been in a particular state, like what Tom was talking about before, is if they've been selling in a state for a while and they established Nexus maybe, a year, 2, 3 years ago, we might say, okay, you need to file or consider filing VDAs. And then, and if that's not the case, then maybe just filing prospectively, depending on whether a state, taxes something or not. So after we do that, the next thing we generally look at is a company's product matrix, is we look to see, like what goods and services are they selling to their customers and where they're selling them. Why we bring that up is, states vary. Obviously, there's not one state like the other. Some states say, if you sell so much gross sales in a particular state, that's enough to require you to register. Like California, they say if you got to sell over 500,000 in sales of tangible personal property to meet the requirements or to establish Nexus. So it really does vary by state. So again, it's got to be something that's tailored by client, because it's not a one size fits all. So after we determine if the client's selling products or services that may be subject to tax, the next step is we look at their customer spread to see, is there any customers that they're selling to that might have an exemption? Mm-hmm. In this case, it could be, the government, it could be a church. Some states qualify and exempt organizations like 501c3s and so on. So generally we start with the first question is have you collected any certificates? And we kind of joke about that a little bit, but in all seriousness is oftentimes they're like, well, what is that? And we're the first time to tell them, and I'm sure Tom could, jump in here too, or if he wants, but we've seen this time and time again, where a lot of customers are so focused on their business, they don't realize that they're accumulating a tax liability at the same time if they're not filing timely. So
yeah, the exemption certificates, Jared, that's such a good point. You may not be collecting, a resale certificate, if you're a distributor reselling a product, or an exemption certificate, but you don't know what's going to happen in 2 to 3 years, right? I mean, if you get audited, you get a Nexus questionnaire, that customer could be sold. It could go out of business. And then you may have sold something to a distributor that they were going to resell. There's no tax due on it. But you don't have that form. You don't have that piece of paper to verify that to the state. So you're stuck paying someone else's tax then. I think that's the one biggest takeaway I tell a lot of my clients. And when I do speaking engagements like this, it's, collect the certificates. Whether or not you're registered in that state or need to register, have those certificates, put them in the file cabinets, store them electronically, do whatever. but have that proof, have that validation in case you ever need it.
Yeah, thanks, Tom. And oops, sorry, Amy.
No, you're fine. I was going to say we had a great question that came in sort of pertaining to this and the previous slide. It's asking, an employer provides a service. How do you handle remote employees who are not selling anything but working for that company? The employer is not trying to create a market where that employee is living or in that state. Is this employee creating Nexus?
Yeah, that's.
Yeah,
Amy, go ahead, Tom.
No, go ahead, Jared.
Yeah, I had a situation recently. It was a company was selling software. It was in the state of Texas, and Texas actually is probably one of the more broad states in the sense of, like what type of employee is residing in that state, and is it just sales? Is it an IT person? Is it a marketing person? Where other states, it's just more focused on, sales employees trying to establish a market. But a number of states are starting to expand their definition of what establishes a market. And in this particular situation, I saw where Texas might actually require our client to register because of that IT employee in the state. And again, this is evolving. I don't think the states are done yet. But I mean, we're only a couple years past COVID, with the work at home rules and stuff that are continuing to develop. So, and I know, Tom, you focused on this and spent some time, where it's actually creating a bunch of challenges for our clients trying to keep ahead of it as their employees are, moving and working remotely throughout the states.
Yeah, I mean, it's really become an issue even since COVID, right? Where a lot of people worked remotely. They may have moved home or to a different state or worked from a vacation home, but those rules have relaxed at this point. We're back to the fact that does create Nexus in most cases, for sales tax. And if that person is not soliciting sales, it could create Nexus for income tax as well. So it's definitely something you need to be careful of, regardless of whether or not that's a potential market for, your business or what you're selling. You may have a filing requirement. And, if you're filing withholding taxes, then yeah, the state's got to know you're there, pretty quickly.
That's a great point. All right, let's jump over to our second polling question here. Again, if you're here for some CPE, we'd love to encourage you to answer this. How does your organization currently handle multi-state tax compliance? Are you managing everything in-house? Like Tom mentioned earlier, there's a couple folks who are wearing multiple hats, handling everything in-house. Do you outsource certain aspects, filings, calculations? Are you fully outsourcing compliance to a third-party provider or firm, or are you still evaluating your approach? So we'd love to hear how you're handling the multi-state tax compliance. Again, Tom, I'll ask you here, where do you think we're going to land?
I think you're going to get a lot of, we manage everything in-house, maybe outsourcing certain aspects of it. I think that's what we see a lot with, our clients, some of our smaller clients.
I understand. And we'll talk about sort of that tipping point here in a little bit. So it'll be interesting to see where the results lie. I have about 90% of folks who've answered. So again, I'll point your attention to where the screens are shown. That's where you'll see the poll question. I'll go ahead and close this out in 3, 2, 1. Guys are nailing it today. That's fantastic. But I think this gives a lot of room for opportunity for us to discuss just outsourcing potential and some automation potential. So perfect timing here. Again, Tom, what is that tipping point with compliance needs? You get to a point where you just need a little bit of extra support.
Yeah, I think Wayfair and the economic nexus, revolution there was really what generated and started a lot of this because, at that time, if you didn't have physical presence in other states, you really didn't need to file. So you may have filed in 1, 2, 3 states, the neighboring states, maybe you were making deliveries or whatever, but didn't really have a big compliance burden for sales tax purposes. And, if you only had a few states, relatively straightforward, and you've done those states for years and your staff was maybe well versed in those state tax laws, can handle that compliance, and it wasn't much to do. And then all of a sudden, bang, you may have filing requirements now in 30 states, and you have a small staff of people internally, and you got to find a way to handle that on a daily basis and a monthly basis. So I think that really is what determines it. That number of states is getting more and more complex and more filings. And, your employees have a limited time, right? If your accounting staff or your controller, I mean, they've got other things to do. Filing sales tax is something that takes a lot of time every month, every quarter. So, I think there's that opportunity where if you can outsource or use some automation to speed that up, I think it makes a lot of sense for businesses.
Jared, I'd like to bring you in here because I know that sometimes it's not one side or the other. You can have a little bit of both via a hybrid model. I'd love to hear your thoughts on how you'd approach that.
Yeah, so when I worked in industry, we worked under a bit of a hybrid model where most of the advisory was in-house, the compliance was outsourced. A couple reasons why is internally we didn't have the technology, and we were under the notion that Excel solves everything. And I think as technology continues to evolve, Excel is a great tool, but not something to solve for multi-state compliance. And so when I was there in industry, we outsourced our returns. Again, because the models, it made sense to us to do that. And then we could focus on the advisory, like the audits, advising the business on how to, to minimize their tax liability. And then if you look at it from like a firm perspective, if hybrid's not a fit for you, I mean, you could have a full outsourcing model as, maybe you're good at making widgets and selling widgets, but you're not sure how to pay your taxes appropriately. So certainly there's resources and experts or subject matter experts that are out there that can handle that for you. And then it gets to a point where, if you're selling in, I'd probably say, and again, depending on your volume, the technology is more affordable these days, where there will be a tipping point. You say, you know what, automation is the way to go. So I can turn on taxes faster. I mean, I've had experience with clients where they used to set up a rate for one location and it would take them a week to do that. Whereas if you had a solution like Vertex, you'd have to do some testing and stuff, but you could, in theory, turn the state on in a matter of minutes or even seconds to be able to start collecting taxes from your customers. Just, be careful. We've had some clients swing too far where they're not familiar with the software and they just check the box. So I think sometimes, and they say, oh, I've been collecting this tax, but I just haven't been paying it to the state. Those are some of the stories, right, and experiences we've run into. But, I think the best thing to take from it is that it's okay to seek help because not everyone has all the answers. And I think this hybrid model is pretty common, in larger, especially the Fortune 500 businesses that work with consultants on a regular basis, all the way down to like what Tom was saying is where, somebody might be really good at running their business, but they just don't want to deal with taxes. And they turn to us or another firm, obviously for help. So, in a completely like a full outsourcing model. So, as your business grows, I mean, you just have to find what fits you the best.
Yeah, Jared, like you were saying, you may have the best intentions. You go get a tax engine, something that's going to, calculate your sales tax rates, collect it from your customers. And, I had an experience with a new client last year. They were advised to start collecting tax. So they started collecting tax. They switched on, they checked all the boxes, and it was about 4 or 5 months. And they're like, oh, what do we do with all this tax we've collected? So, we had to come in and help them, determine, okay, we have to do some registrations. There's some voluntary disclosure we need to do. And they had exposure for prior years, and we needed to figure out how to mitigate, right? I mean, I think that's always the big thing for us is we want to manage your risk. We always, our mantra, sound, dorky with that, but our mantra, manage risk, add value. We like to say we help our clients manage their exposure, their sales tax compliance risk, but on one end, and then a lot of with the consulting and some of the other stuff that we do, kind of add some value to their business.
I think that's a perfect segue, because if you're stuck in the manual processes or using spreadsheets, you're not able to add that additional value because you're bogged down in that manual work. So I'd love to talk a little bit here about that tech-enabled growth and really leaning on automation for success. So Tom, take us back to where your salt practice started, and then sort of how you started integrating, deep breath, how you started integrating that technology to really deliver those higher value services.
Yeah, it's very interesting because, coming from, my background was Big Four, and, we never thought of doing compliance, sales tax returns. We did consulting. Refund studies, audit defense, Nexus, and that, and didn't really want to get down and dirty with the compliance. It was high volume, kind of a low, return on that maybe. But, really when I came over to Tronconi in the early 2000s, we were kind of the same way. We did consulting. And then I would say 2016, 17, we had a client that did environmental remediation services. I think Jared remembers this one, multi-state, and they were a mess on the sales tax end. They weren't filing returns timely. They didn't know what was taxable, what was exempt, and it turned into an engagement where, at first was just get the returns filed, but being on site and like walking the halls and talking to people, every week we were there was something new. There was some other type of project to help them out with and do. But back then, everything was Excel, right? We were using Excel schedules, and we were logging into the state website, preparing the return, paying it online. I still think I can tell you that client's bank account number because I typed it in so many times. But it was feels like a long time ago, and we've come so far, I think, with our evolution, from consulting to compliance, and then really doing that compliance efficiently.
I agree. And you have that volume, like you said, you reach capacity with volume. What's the most efficient way to move forward? And automation is really the answer. Mm-hmm. Jared, I know you have experience with this from working in business and industry too, with, in that retail space. Do you remember that tipping point that you experienced to really start that hybrid approach?
Yeah, when this, my work experience in industry was when they moved from brick and mortar to e-commerce. It really gives you or allows you to, to reach customers you didn't previously. And then the moment you go outside of probably 5 to 10 states, it exponentially gets more complicated to stay compliant. And, with tools like, Vertex's tax engine, which, I'm a huge proponent of. There's certainly other ones on the market, but my experience is with Vertex, and it gives you that ability to scale and be efficient, and you can rely, or at least let them be the ones that take the first pass at researching the taxability of a product. I mean, to think that a software tool like that has over 1,000 categories that are already predefined, across the 50 states and territories to help you reach your goals is quite impressive. So you might be just moving from brick and mortar so that's one reason, right? Like if it takes manual effort to set up rates, Vertex can maintain those for you in a tax engine, which is pretty common these days. And then, taking data out of like extracting it from the billing system, which may not always be jurisdictional specific. That's the bonus of leveraging technology like a tax engine, and then some reporting software that's built by a company that understands taxes, versus somebody like trying to home grow something, in a spreadsheet, which is, can easily break. So, and then the bonus to that is if you're not focused on, tracking those things down, you can help the business be the business they need to be, right? And stay ahead of, new offerings, right? And helping them try to get the taxability flag set in the beginning, not necessarily in the end when you're being audited.
Yep. So I think it's a great time for our third polling question. I'd love to draw your attention to the area where the slides are shown. So thinking about the technology conversations we've had so far and the importance of automation, you might be thinking about working with a technology partner. So what's your top priority when evaluating who you want to work with? Is it automation and efficiency gains, the compliance and accuracy, risk reduction, cost effectiveness and ROI, or are you really concerned about integrations with your existing firm systems? Tom, when you were first on the market looking for a technology partner, did any of these matter more to you than another?
I'm just reading these answers, and I look at it from as on the firm side and the provider side. I think A and B, right, are more important to me. But if I look at it from one of my client's perspective, I think C and D, would be the more important, because that integration with your existing systems is so key. And then the cost effectiveness of it. I mean, are you really, will it help you save that money, instead of trying to do everything manually? But I'm interested to see what the response is here.
Yeah. Well, it looks like we've got about 85% of folks who've let us know. Again, if you are looking for that CPE, this is our 3rd out of 4 polling questions. So feel free to drop your answer in the box. I'll go ahead and close this out in 3, 2, 1. All right. So I think we're on track here, especially coming from the firm perspective.
Mm-hmm.
Okay, so we've talked about setting the stage, complexity, compliance, life cycle. Now, once you have that automation in place, you open up the door to some new advisory opportunities, especially in the post-wafer area. So Tom, talk to me about moving from that historical transaction approach to now providing those higher value add services.
Yeah, I mean, I think, once you work with a client, you help them, right, manage that risk. You've determined Nexus, you've gotten them registered, they're, integrating a tax engine, and they're collecting, remitting, and everything with that. It's, what else? What else could I do for you? How else could I help you? Where could I add value to your business on the advisory end? And, whether that's, looking at purchases for a sales tax refund study, or looking at their utilities, maybe if they're a manufacturer, helping them get on the front end of things, right? I mean, I think, prior to Wayfair, sales tax especially, I think a due diligence during an, M&A, transaction, right? Prior to Wayfair, like, sales tax was a one-off question maybe. Ever since then, especially if you're dealing with a business that sells online, software company, that's like one of the first questions they're asking. Like, where are you registered? Are you collecting tax? So I think getting that seat at the table, getting tax and state and local tax, that seat at the table where you become an integral part of helping the business, make decisions from a tax perspective, and getting them to think about the implications of their business activities in different states. I think it's very important, and really it's being in connection with your client too. We used to say the whole walk the halls, and we don't do a lot of walking the halls anymore, right? Everything is so remote and electronic, but getting out and talking to your client and seeing what's going on, and finding out maybe they're expanding here or a new product line, and what can we do from the firm perspective, right? Like, not only from SALT, but we look at it as our firm. We always consider SALT to be a wedge into the door for a lot of our other firm services, be it tax or small business, M&A, valuations, other things that we can bring to the table, once we've established that relationship through our SALT practice.
That's a great point. And Jared, I think that you'd mentioned an example where a client was expanding and making sure, I think it was in Michigan, where you said if you hadn't had a seat at the table, you couldn't have given them that advice on what to do. Can you elaborate on that?
Sure. This is really a great example of a hybrid model. This client has, their own internal staff who focuses on compliance and audits, and they do leverage Vertex for like use tax and keeping track of those purchases. But where they partner with us is to help them, up front. And this was a pretty significant project. It was about $1 billion facility that was being built in the state of Michigan. It gave us an opportunity to sit down and say, is there any incentives? And this is a shameless plug for, if you're ever looking at incentives, is ask for them before you, or reach out to someone before you announce that you're moving into a state. But, just some things to keep in mind. But like with this particular client, there's tons of opportunity with, like a manufacturing exemption in the state. And the best time to be looking for those exemptions is up front. And if you're leveraging technology, or you have built efficient processes to say, okay, I'm going to move myself to the front of the line versus, trying to play cleanup, anytime an audit happens, or, you just run out of time that particular day. That's probably, if that's one takeaway from this webinar, is try to get yourself in a seat at the table, is where you can do the best for your company to really manage risk. And on top of that, one of the other things we see is, by being upfront, is before the ink is put on paper, is you have an opportunity to make sure or kind of modify language in documents that might support a better tax position. So by doing all of this, it gives you that opportunity to get back to the front, versus, focusing on the back end and try to, put the fires out time and time again.
Yeah, we want to be proactive in this, not reactive.
Mm-hmm. Yeah.
So that's, yeah. So having that proactive mindset, Tom, table stakes, automation, that's where it's at in 2025. Can you share benefits for firms and clients on just how automation can really help mitigate that risk?
Yeah, I mean, I don't want anyone to come away from this thinking, oh, I've got to go, migrate to a whole platform, right? I got to go invest all this. And we hear enough on the firm side about offshoring and AI and those investments that we need to make. But, any small step toward automation, right? Whether it's doing some type of returns through like a cloud package like that Vertex has, or, using their, VITR system to do returns. I think anything you can do to kind of take the manual out of some of these processes, excuse me, I think that's important. I mean, I think for a firm, it should be part of the whole firm, strategy to have a digital transformation plan to, make things a little more automated. But, really it's important, to select that right software, evaluate the different options, and, train your staff. I mean, on both ends, I have clients who've gotten great software packages and they just sit there because no one's trained how to use them. So, and it's not a one size fits all. You have to evaluate where your firm or business is at and where, you can make some, small gains through automation and technology.
That's a great point. And I know we've talked a lot about that adoption journey. Jared, can you elaborate on maybe if it's easier to work on adoption within a certain business segment?
Yeah, so I emphasize journey, right? This is not something that's going to change overnight. And like Tom said, just take small bites of the apple, get some wins, and then appreciate what technology can do for you. And again, it can, and if it's not the right technology, it could impact your business too in a not so positive way. But I've seen where clients, kind of dip their toe in the water. They might say, okay, this business segment, we're moving into e-commerce. We really need a tool. We don't want to use the resident engine that's in that particular software, or maybe they're building a custom website. They're not using a out-of-the-box technology, like QuickBooks or whatever, where it's homegrown, that it requires a bolt-on engine. That may be something that works for your business at that time, or maybe you can live with the resident tool that's in the ERP system that you're using. Again, the best thing you can do is take a step back, evaluate, what your needs are, look at the ROI. My experience is it takes a lot to convince a business to jump and jump on this train, and understand it's the right tool in the toolbox for your business. So it takes a lot of convincing, but also once you get something like this in-house and in place, it has great benefit to your business. It minimizes your risk. And then allows you to help, support your business or your clients in other ways, and really go after, some of the more, the more lucrative work, which is, audits, the consulting, making sure people are keeping track of Nexus and other things. So, Amy, that's really, a good way to look at it for businesses is take small steps, right?
Mm-hmm. And you may not get it right the first time, right? You may have to go through a series of different trial and error with different software products till you find, the one that works for you and for your business environment.
Exactly. Yeah, you never want to jump in too quickly with something, especially when it matters to both your firm and your business. So we're going to talk a little bit here on how to get started and just a couple additional resources if you'd like to explore more. So we have a blog down here. We have a newsletter if you'd like to stay in touch with Tronconi, Segura & Associates. And also the AICPA has a great state tax nexus checklist, which is in your resource widget of the platform. So Tom, thinking about getting started, like you said, baby steps. What did it look like for you when you guys got started using Vertex?
Well, I mean, like I said, we had been doing consulting for a long time, and that was our main activity as a sole practice here at the firm. But I think once Wayfair, hit and we saw the need, from our clients to help filing these returns. I mean, one of these, we knew nothing, like I said, we didn't know much about doing compliance. I actually took the CPA.com roadmap to a sales and use tax practice model class down in New York City. That was great. I mean, there were some great speakers and, other firms there, and learned a lot about how to really get that practice up and running. And Vertex just seemed like a natural tool, for us, with their connections with the AICPA and CPA.com. We thought it was a good product. Some of our people in-house had used it already at their previous job. So we thought that was definitely a good place to start. And like I said, I think we started using their cloud returns, and then decided, well, our volume is so much now with all these returns we're doing. We went to the VITR software, which we've been using now for a few years, and are, having real success with it.
That's great. And I know, Jared, you've talked about implementations, that it's great to have support on that side, so you're not doing it completely on your own.
Yeah, so a lot of clients have the in-house expertise to help with a Vertex or a tax engine implementation. At our firm, we have a couple of folks who are certified implementers that can help stand up the software. From in what we see from time to time, there's folks that may know sales tax but not the technology. In this case, we happen to know all but really the back end, which is where we can partner with Vertex Consulting, is to be able to set up the software to function as designed, and to make sure that we don't create additional risk for your business. So we thought it was important, after we got involved with returns, and when a couple of us joined the firm, is that we saw this as an opportunity to help our clients do that work and kind of be that that hybrid resource that they need if they decide to embark on a technology journey. And really why we focus so much on Vertex is having that full ecosystem where you're using one, that's the ideal state, right? Using one technology partner. But we also realize that, like Tom's point, sometimes you might start with one and migrate to the other, and then eventually get there. But with these types of changes, it just takes a lot of time. So, but we definitely see the importance of having, if we're doing the returns and with one technology partner, that, trying to encourage businesses to use the same provider for tax engine seems to work, pretty well for companies.
Yep. I'd like to end our conversation today with our final fourth poll question. And also we had some great Q&A coming through the chat. So we love to stay connected with you. Let us know what serves you best. Would you like to chat with someone from Vertex? Would you like to be connected to Tom and Jared if you have additional questions? Would you like to stay in contact with us at CPA.com? We can provide you additional educational resources, or you've had your question answered, which we did our job. Thank you for attending today. So I'd love to just answer a few of these questions. We have a couple minutes left. So let's see. Tom, since Wayfair, have there been any cases that have affected the ruling?
Not particularly. I mean, the states have made some changes, right? We've seen a lot of states who've had the or 200 transaction threshold drop that, because they're realizing you're really not getting a lot of bang for your buck with those smaller vendors. A lot of those sell on marketplaces like Amazon anyway. That's been the big thing. I mean, there's been cases in Pennsylvania, California, South Carolina related to Amazon and, marketplace sellers who've had inventory in those states, but those kind of predate Wayfair. They're not really affecting the Nexus thresholds at all.
Makes sense. I think we have time for one more question. So I'll pose this to either one of you. Let me know who wants to take it. But how risky is it to be registered with states like Colorado and Louisiana, but not be registered with the self-administered local jurisdictions within those states? Is it common for those local jurisdictions to conduct out-of-state audits?
You can take that one, Jared.
Yeah, I mean, home rule states are in themselves a challenge, right? You've got keep an eye out that you may be, you may have Nexus at the state level, but not at the local jurisdiction. My experience, Denver is a tough jurisdiction to deal with. They seem to be actively doing audits, and they're not super taxpayer friendly. So really the thing, and the other thing is if you're a larger business and you use a research tool like, Checkpoint or, CCH, is oftentimes you're not going to find the local jurisdictions in there. It's very difficult to try to, kind of get down to that level and figure out, okay, is this a home rule jurisdiction? Is it not? And, should you register or not, right? And not every local jurisdiction has adopted the states, right? But obviously, one of the things to keep in mind is, I think, right, Tom, isn't Colorado one of the states that's starting to move closer to a...
I mean, they have their SUTS or the SUT system, where most of the localities are on board right now, and they've moved toward more common definitions and uniform regulations between the state and the home rule localities. So, we kind of hoped that was going to be part of the Louisiana tax reform, but I don't think it really went as far as a lot of people wanted it to see with the parishes down there.
Yeah, it's certainly gotten better. It's just Denver seems to be one that wants to go out on their own and do their own thing.
I mean, there are cases too, like in Louisiana and I believe Alabama, where you can register and use a simplified, like, one rate that covers all the state and local, the taxes too, if you're purely a remote seller. So
no, that's
at
great.
least that's something. But yeah, the parishes are tough.
I agree. Well, thank you both. This was a wonderful conversation. I appreciate your time. Thank you to everyone who joined us for this. Again, let us know how you'd like to stay connected so that we can continue this conversation. But thank you again, Tom and Jared, and have a great day, everyone.
All right, thanks. See you, everybody.
Thank you. Bye now.